I'm pleased to be joined by Andrew Tyrie. He's the chairman of the Treasury Select Committee of the House of Commons in the UK Parliament, and they've been known to grill the government on the budget on occasion. Andrew, starting with that point, what do you make of the budget that was presented by the Chancellor?
Well, what chancellors want to be able to do is come down to the House of Commons able to deliver some giveaways, either on tax or spending. What they don't want is to find they've got absolutely no fiscal room. This chancellor has had to make the best of a very, very difficult job. We're in the early to middle stages of a mop-up operation as a consequence of a massive increase in the deficit and, of course, the debt stock, which needs funding. And the Chancellor put in place 2 years ago a programme which has won the confidence of the markets and therefore reduced debt service costs. And he's got to stick with that, and that's what he did today. And that was by far the most important single message, the message to the markets, not the one that's being picked up by, naturally, the domestic press particularly, but it's the most important single message.
I think a lot of the concern is whether or not he's done enough to deliver growth within the austerity constraints. Can you give us your take on the kind of questions that you may still have about the growth forecast and the risks to that growth?
Well, there'll be lots of questions. I mean, there are two distinct aspects to the growth issue. There's, first of all, the short-term issue, short-term demand, is the balance of fiscal and monetary policy right? But there's a much bigger issue, and by far the most important issue, which is the economy being reformed for the long term in a way which will raise the country's long-run growth potential, what's known as supply-side reform. Initially, the government did not seem to have much of an agenda on that. They've been creating a much more coherent agenda over the last 12 months, and particularly over the last 6. The autumn statement was a big step in the right direction as far as that's concerned. It's an issue I've been raising vigorously for many, many months, privately and publicly. Well, yes, this budget does have quite a few things of that type in it. The commitment to tax reform, to simplifying tax, to giving people greater certainty about their tax, that's very important, for example. The reforms to the planning system to make it easier for businesses to expand, that's very important too. Labour market regulation, he hasn't said what he's going to do, but there have clearly been signals in the right direction on that. And then, of course, there's energy costs. The government's committed to a radical programme of carbon emission reduction, but of course that's putting up business costs. He's been making clear today, as he said recently, that he wants to make sure that that programme is not implemented in a way that damages business competitiveness.
Do you think there's an underplaying of the risk from crises, possible crises from the Eurozone, amongst other things?
Well, I noticed that the Office of Budget Responsibility, that's the independent body that the Chancellor created in order to make sure that he was not fingered for having fixed a forecast. The OBR came out only a few months ago saying it was impossible for them to gauge in their forecast what the effect of a severe euro crisis might be. And the Bank of England has said, words to the effect of there being a very significant catastrophe risk that could come out of the Eurozone. That's very strong stuff for a bank, a central bank. They're normally very, very cautious chaps. So I'm wary of the fact that there may be something coming, an exogenous shock, as the economists say, something coming from left field that could knock all of this askew. There's only a limited amount that the government can do about it, though. What they've got to do is stick to the task of steady deficit reduction, demonstrating that they are going to put the public finances in order and do their best to insulate themselves from that threat.
I think some of the worries of investors will be that the UK government doesn't actually have any fiscal room to maneuver should one of those shocks come. And I think when you are looking over what the government has presented and what the OBR has presented, do you think they've done enough to insulate the UK from these kinds of potential shocks within the room available?
This crisis has, in large measure, been a monetary phenomenon, and the tools that will be used to tackle it will be monetary. As we've seen already, if you remember, fiscal policy was used to try and generate some short-term demand in response to the shock created by the collapse of Lehman. In the 2009 budget, Alistair Darling did raise did relax fiscal policy by £20 billion. But just to put that into perspective, over the last few years, we have injected £300 billion in quantitative easing, and £100 billion of that in the past 12 months. Now, of course, those two numbers are not directly comparable. They're not quite the same thing. Still, you can see it's monetary policy that's taking most of the strain here, and it's going to continue to do so. Yes, there are other monetary shots in our locker that we can fire if we hit a crisis, but there's no point pretending that we're not sitting right next door to a currency zone that has some fundamental flaws in its design, and everyone knows that they're there, and the Germans and the French are trying to put those right, particularly the Germans. But it's going to be a struggle, and the crisis appears to have, it's not gone away, but it's moved a little further down the road for a while, but the Greek potential insolvency problem is unresolved, and there are a number of other problems lurking in the system in the Eurozone that sooner or later really do have to be addressed.
Have you pushed the government or the Bank of England to have a contingency plan in that instance?
Yes, we have discussed it. It's not our job to write their plan for them. Indeed, we couldn't possibly do so. But as a committee, it is our job to make sure they're thinking about these things very carefully, getting all their ducks in a row and having worked out exactly what would happen. That was the tragedy, really, of 2007-8, particularly the 2007 bank run crisis when Northern Rock went down in the UK, was that it seemed that adequate thinking had not been done about exactly that, and as a result the effects were more serious and dislocating for millions of people than it would otherwise have been.
Very finally, just a very final point on the budget itself. Quite a lot of the budget measures were known to the press in one form or the other. Are you happy that so much of the budget measures were actually out there before the budget presentation itself?
The Treasury Committee has expressed concern about budget leaks and apparent briefing. Parts of the budget were released out on the web beforehand. That, it seems to be quite legitimate. It's an unusual thing to do. What can be more problematic is when journalists are quietly briefed about things. All I'll say on that is what I said in the House of Commons immediately after Ed Miliband spoke today. The Treasury Committee will be looking into all this again.
Thank you very much for your time. That was Andrew Tyrie. He's the chairman of the Treasury Select Committee in the House of Commons of the UK Parliament, expressing some concern about the conduct of the UK budget and also significant worries over the still ongoing crisis in the Eurozone and that impact on Britain.